Good morning. Welcome to Trading Hour. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I am Reema Tendulkar. With me is Vivek Iyer, and it's 150 points lower on the Nifty at 11 o'clock. The Sensex is down close to about 400 points as we speak, in the red for the key benchmark indices, but there's so much news flow to navigate. The big overarching headline is that Trump's sweeping tariffs have come into effect. US is now taxing China at 104%, and China is not backing down. Their latest commentary seems to suggest that they will fight till the end. Asia is bearing the brunt of this selling pressure as the trade war seems to enter the next leg. Shanghai is only down close to about 0.3%. So despite being in the eye of the storm and in the epicenter, the Chinese markets have actually been relative outperformers, in a way sort of de-risked from the rest of the economy. Hang Seng is down 1.7%, Taiwan, Nikkei down 5% and 4% respectively. And so many markets on a year-to-date basis, the Taiwan and Japan particularly, are down more than 20% on a year-to-date basis. And as this trade war seems to be rapidly escalating back home in India, it's IT, metals and pharma which are bearing the biggest brunt of the selling pressure. The Nifty IT index is down close to about 3%. And not to forget, back home over here, we've got the RBI policy on expected lines, cut interest rates by 25 basis points. They've changed the stance to accommodative, and we'll have gold loan companies to watch out for.
Absolutely. Good morning, Nima. Like you mentioned, week handover, two very important events, sweeping tariffs, that came into effect a few hours ago, and along with that, the RBI policy, the MPC committee, along expected lines, going ahead and cutting policy rates by close to 25 basis points. Let's have a look at the impact post-policy. The Nifty now down almost 160 points, and what are the stocks that are under significant pressure? The entire gold loan lending pack. So names like Muthoot Finance, Manappuram Finance, remember that particular stock is in the F&O ban today, IIFL Finance, all three of these stocks that have direct gold loan lending practices are under pressure. What has the RBI said? Well, they have said that they're going to go ahead and review the guidelines in terms of gold loan lending. So at this point of time, it is still unclear, but we are expecting a lot more clarity from the RBI later today when these practices are made public. Now, along with that, which are the other stocks that are seeing pressure? The entire NBFC pack up. So names like Chola Fin, Shriram, Bajaj Fin, all of these stocks too under significant pressure. In fact, Chola is down almost 5%. The other stock that's taken a bit of a knock is SBI Cards. Well, some commentary in terms of going ahead and relooking the limit in terms of P2P lending is something that has ensured that SBI Cards too has remained in focus. And, from last night or from last evening, the entire Pharma pack under renewed pressure. Tariffs are definitely here to stay, especially when it comes to the Pharma pack. So names like Loris, look at that, almost 5% lower. The entire Pharma pack, Aurobindo, Ipca, all of these stocks under significant pressure.
Well, that's the picture at 11 o'clock. As always, we'll invite Ajay Srivastava from Dimensions Corporate Finance Services to join us on the show. Ajay, make sense of all the news flow for us, and what should investors do?
I think, there is more news flow than anyone can reasonably expect to handle. So in which case, I think you just go back and relax, because there's nothing you can do. Events are moving faster than you can evaluate. Things are volatile at this point of time. And you know what, Rima, one thing stands out. And I think that's the most important thing which amazes me. No other global leader or a company or a country has ever come out with a radical policies to balance out what's happening in America. America has done what it has to do to protect its interest. But whether it's China, India, you look at UK, France, none of them have done anything at all. What stops us from having a large GST cut? You do change the regulations, free up the economy. And on top of that, we have RBI again saying, I've got a new gold loan. Anything which works well, the regulatory scenario in all the developing countries means go tap it, change it, and I'm going to take you out. So if you look at India's history, we had a capital gains tax, we had a huge pressure on F&O, trading volume, margins have been put, change of this, settlement date changes. You name the interventions, but the big ticket is missing. You need to match America. America has done grand stuff, actually. We may not like it, but from their perspective, they've done what they could. The biggest economic moves have been made. It's up to the countries to respond now, and each of the country can only be blamed itself if it doesn't respond to what's happening in America. So investors, I think you brace and wait and see whether your government, and it goes for any country, will respond to what's happening in America in a more constructive way. It's not happened so far. Will it happen? I do not know. But today was a gold loan regulation for RBI was disappointing. It was not required. But again, we need to push the levers of anything which goes well. That's the beauty of bureaucrats. Find me a good thing. I'll tell you how to unfix it.
So what would you do then with gold loan companies like Muthoot Finance, Manappuram, Chola, IIFL Finance? All of them, as you can see on your screen, are reacting, and they're worried about what might come out in terms of these comprehensive guidelines. You clearly don't like the idea of them being regulated. What are you most worried about, and what would the advice be on these stocks?
I think RBI is going to be pushing the gold loans towards the banks. The banks have been the biggest loser in the last 5 years on gold loan. They just couldn't get their act together. They're lazy bunch of banks we have in India. And what RBI is trying to do, and I guess we are all guessing, nobody knows what the regulation looks like, so we're all guessing it. My guess is that the regulatory nudge will be that let the banks become more competitive by bringing out pressure on the gold loan companies. I think net, this is what RBI has done in the last 10 years or 20 years. This is what they will do to get the bank a little more competitive edge in the market, but using the regulatory levers. There's nothing else needs to be done. The guideline was changed last year. We had a weighted measures on gold, the gold price saying you penalize the companies which flouted the law. It was doing well. If you go around the country, people had very easy access to gold loan. There's nothing you need to do. It was working quite well. So my only guess is the nudge is going to be move the business away from gold loan companies to the banks. That's my only guess. Nothing else was required in my view, and we'll wait and see what the guidelines unearth, something, which is totally, we didn't look at it or it was hidden under the carpet, but I doubt it. It's all about push the business to the banks.
Ajay, take your point completely on board. However, are you a little surprised in terms of the reaction, given the fact that the new norms are still to be notified? The RBI said there will be a comprehensive set of regulations that come into impact. One of the key points, like you mentioned, could be the fact that they could nudge more gold loans towards banking sector. What could be some of the other aspects that RBI is looking at? Are they worried about the lending practices itself from NBFCs?
See, Vivek, the market is fragile. You're putting into a mysterious regulatory point just when the market is most fragile at this point. Investors are literally at tenterhooks. People have just started to build back a little bit yesterday, and next morning you throw. So it's not about just the regulatory, it's also about timing. You got to be a little smart about, doing these things in a market where investors, companies, etc., are more confident of the future and they can absorb regulatory changes. Once you throw a bombshell in an already, it's like saying that let me pour some more kerosene in the fire and let's see the fun. No, its reaction is overdone. I think nobody knows the guidelines, so selling off is the thing. But just market is fragile too. It cannot take any change. That's all it's telling you. And I think we need to recognize that this market needs a cooler hand, a saner hand, a stable hand, not changes at this point of time in a regulatory scenario.
Ajay, own any IT in your portfolio or in your client's portfolio?
Zero, absolute zero IT, and I think the reason was different, not because of the tariff, but the reason was the growth rates were looking very anemic in the US, and Indian companies have not really done what it is. And number three is, thanks to our guidelines, we can invest directly into technology companies across the world. So Indian technology companies were not the most attractive bets at this point of time. So we have zero at this point of time. But having said that, there may be a time which will come when we will come back and buy it. But let's ride out this uncertainty which is killing us at this point of time. And maybe there will be, the GCCs, the capability centers might get a leg up thanks to the US tax cut which are coming into place or should come into place. So, in this volatile environment, you should rather stick as a concept we have stuck to domestic industries relatively unaffected by what's happening in the US tariff barriers, export, import. So, the only safety is buy India, make India, consume India is, I think, the safer place to be at this point.
Understand that, Ajay. Ajay, if we could, once again look at the BFSI pack. Post-policy today, there were expectations that NBFCs actually stand to gain from the rate cut. But what we've actually seen is quite a bit of a sell-off even amongst the NBFCs, gold loan NBFCs aside. So at the current juncture, how do you view NBFCs and also your view on banks?
NBFCs have always been the poor cousins in the banking environment. And unluckily, as I told, same issue with RBI is that it just nudges everything towards the way of the bank. So NBFCs have by and large been uncompetitive. in the scenario. Only maybe 2 or 3 have been able to thrive and survive, the larger ones, if you look at it. But apart from that, the whole industry has plagued with underperformance. And not that they have done great justice. Some NPAs come out, something come out. MFI, you see what's happened to the merger of MFI with banks. They have been a disaster. So, the point still remains that the regulatory overhang favors the banks at this point of time. NBFCs are volatile because regulatory changes can change dramatically. And number 3, of course, is that as the economy starts to slow down, and which is very visible at this point of time, NBFCs are left with lending to segment which they should not be lending to, and the risk is going up now in the business. So what was a good borrower last year may not be a good borrower this year. I think that's what is happening today, that the quality of borrowers is going down. And in an environment where the wealth impact, Vivek, look at the wealth impact. Look at, if you were an investor was sitting with a portfolio surplus last year, you were willing to spend money and you were willing to borrow money and invest or consume. Today, when you sit 1 year down the line with your portfolio devastated, economic uncertainty, would you be a willing borrower to buy for consumer durable cars or houses and so on and so forth? I think propensity to consume is going to go down with all the volatility and wealth impact, and that will first hit the people who used to borrow from NBFCs and who used to pay a little higher rate than the banks. Therefore, they were a little less credit worthy. And I think that's what's going to play out now in the next 6 to 9 months till the thing stabilizes. The NBFC's borrowing population, I think, will shrink and the quality will deteriorate.
The negative wealth effect has got to start hurting at some point of time. But Ajay, what about staples? The only sector today which is strongly in the green is Nifty FMCG, 1.5% higher. It falls in the bucket of Consume India. RBI's inflation projections for the first 3 quarters of FY26 are below 4%. And plus, there was that budget boost. So in your domestic-oriented portfolio, does FMCG find its way?
Unluckily, there's very little we have in the FMCG for the simple reason that the competitive intensity has become huge in the local market. And that's where it is hurting everybody. It's not that demand will not go up, it will go up. But look at the number of new players coming to place. The quick commerce players are coming directly. The newer players are coming. The malls are coming. The Reliance retail kind of stuff are making their own product at this point of time. So, so the environment is getting so crowded on a 6 to 10% base of economy, because every day we find a new player coming and a new segment. Look at the products. We want chemical-free soaps, chemical-free detergents, where Hindustan Liver doesn't have the product. You want more organic stuff, and it's selling. You go to Amazon, you're selling. Companies like Two Brothers are selling crazily out there, but they will not buy an atta from a large company in India. So, the market is getting fragmented, is getting into different areas where people are not able to do it. That's why the edge with the FMCG had is gone today. This competition is killing everybody in the market today, and the new players are entering. So in the Consume India leg, I would still say hotels, hospitals, aviation. I think the 3 legs to this one, which continues to grow and be safer bets for you. FMCG is going to say serious competition from all around them. There can be a temporary 1-2% blip up, but if you're in equity, you need to be at 20% return expectation. If you want to make 8-10% or 12%, you might as well buy a gilt fund. It will give you 10-12%. So investors have a choice. You want 10-12%, just buy a gilt fund. It will give you that return. You want 12 to 14%, you go buy a power transmission REIT, will give you the return. But if you're in equity, you not to look at 20-24% return, and that's not going to come from FMCG.
Completely take that point, Ajay. Ajay, one sector that's been in the midst of very heavy news flow and largely negative has been the pharma pack. You spoke about domestic-facing hospitals as something that you'd like to own, but how do you look at the pharma pack, especially generics that supply significant volumes to the US market?
Again, Vivek, they're very good companies, okay? And we had large investment. Today, we have almost zero. But the point remains that uncertainty is killing the investor at this point of time, and you don't need to worry about being late to the party. You have enough time to go back in pharma. Nothing wrong in the companies, very strong companies, almost debt-free companies. Cash flow is humongous. Everything is good. But again, the point is the uncertainty of tariff. How will they react to it? What will happen? Almost 50 to 60% sales of most companies are to the US market at this point of time. How will they diversify away? We don't know the answers at this point. So I think it'll be wise to just wait and watch. But let me tell, They are excellent companies. You cannot duplicate them. Even if America wants to shift it to America, it cannot happen. The production capacities cannot be set up overnight, certified. It takes a pharma plant literally 5 to 7 years to stabilize and get certified. So it's not something which you can switch, or it's not like assembling phones. You can start it next morning. So this is a different business. So owning this company is a very good idea. They're very good companies. But as I said, just wait a week, 10 days. Let's see where the play comes from the US side, and we will know the answers. But long term, it's an excellent thing to own these companies. They'll give the best return. Domestic market, which is 40% of these companies, is doing reasonably well. It's not grown so much because maybe we're getting healthier, except in people in Delhi where we are dying of pollution, but others are going healthier at our cost. But I think it's a good place to own yourself. Just wait 10 days and see where the tariff comes.
Got that. Thank you very much for that. Some buying is emerging in the, domestic two-wheeler names. So Hero MotoCorp, Bajaj Auto back in the green with a gain of about 1%. That intraday will come up for you on your screen. On the other side is Commodity Corner. Manisha Gupta joins in to tell us what's buzzing.
To the CNBC-TV18 special, the global markets have been in a state of mayhem ever since President Trump decided to go through with his tariff policies. In fact, 9:30 a.m. today, India's tariffs have kicked in at 26%. The other worrying aspect that's come in overnight is President Trump reiterating the call on tariffing pharmaceuticals. Remember, pharmaceuticals have been exempt so far, but this is the second time in the last few days that President Trump has talked about tariffing pharmaceuticals like we've never seen before, in his words. President Trump also speaking at a dinner last night and claiming that countries were calling him up, leaders were calling him up to try and get deals done. The USTR, of course, making it clear at this point in time that there will be no exclusions to what has been proposed by the US as far as tariffs are concerned. But to talk us through what we should now expect as far as America's intent to do business with the world is concerned, the impact of all of this on the global economy, and more importantly, how India finds itself positioned in the global markets, is noted economist and a very vocal critic of the tariff policies, Jeffrey Sachs. Thank you very, very much for joining us here on CNBC TV18. A lot has happened over the last few days. A lot has happened overnight, as I pointed out. As you look at these tariffs and playing themselves out, what worries you the most today?
If something wipes out $10 trillion of market capitalization in 2 days, you're probably on the wrong track. The United States is on the path of wrecking the world economy once again. I say once again because the U.S. has a bad habit of wrecking the world economy. It did it in 1930 with tariff increases, the infamous Smoot-Hawley tariffs, which were one of the major provocations that led to the worldwide Great Depression of the 1930s. It did it in 2008 by blundering in its forced bankruptcy of Lehman Brothers on September 14th, 2008, and that put the world into a tailspin, the Great Recession. Now it's doing it a third time. This is out of the fervid imagination of one person. This is not U.S. policy. This is not congressional policy. This is not U.S. public policy. This is Donald Trump's policy. He is single-handedly wrecking the world economy. And I think the damage is going to be done before it gets undone. So we're not in a good situation. The markets are not the only ones telling us that. We're hearing from business people all over the world that long-made value chains, supply chains for critical commodities, for consumer goods, for industrial products, for making automobiles, for making smartphones, you name it, are being profoundly disrupted. And we have somebody laughing as the world economy burns. And that is our president. So this is not at all a case with the silver lining, unfortunately.
Well, it doesn't look like there is any silver lining at this point in time, Professor Sachs. But, you know, you talked about the wrecking ball approach that President Trump seems to have taken and the impact it's going to have as far as global growth is concerned. But let's talk about America. You know, Larry Fink saying we're already in a recession. Bill Ackman, one of the biggest supporters of President Trump, coming out and saying we're headed into a long winter now as far as the economy is concerned. The impact so far has largely been felt in the financial markets. When do you start to see this impact the real economy?
If the survey data are correct, we're going to see it in consumer purchases declining sharply in the coming months because consumer sentiments are falling through the floor. That means that we're going to have a significant demand shock in addition to all the multiple supply shocks of disruption of global supply chains. These businessmen expected to be making fortunes at a business-friendly administration. For them to be speaking out after they invested so much money to buy the presidency for this person is also indicative of their state of mind. So I think what we're hearing, again, I'm not a short-term macro forecaster, but we're hearing that the odds now are odds on for a U.S. recession in 2025.
Odds on a U.S. recession in 2025. But let's talk about the latest development with respect to China. And the president saying that China is going to be tariffed higher, another 50%, which takes the total quantum to over 100%. China saying it will retaliate with countermeasures. Now, do you believe that the possibility of China selling U.S. bonds, it holds about $800 billion in U.S. bonds directly, you know, there are many in the market who believe that that will be the option of last resort. How do you believe China is likely to play this out?
China, of course, has been diminishing the share of its foreign exchange reserves held in dollars for several years now. China is not naive when it sees that the U.S. has confiscated the reserves of several countries now in which the U.S. has geopolitical opposition. So the U.S. took and froze, of course, the more than $300 billion of Russian reserves, technically in Belgium and Euroclear. The U.S. grabbed the foreign exchange reserves of Venezuela. It did the same for Iran. It did the same for Afghanistan. It did the same for North Korea. The U.S. weaponized the dollar well before this latest round of trade hand grenades. So China already has been diminishing its holdings of dollars. The BRICS have been working on, and I hope that they accelerate, non-dollar payments, because we're going to need, the world's going to need alternative ways to make payments when you have this kind of obstreperous and unstable government at what is now the core of the payment system in the world. So China definitely will not just sit there with its forex reserves in dollars. Whether it will act abruptly in a reaction or whether it will gradually continue the direction of sell-off, I don't know. But it will continue in the direction of disgorging itself of U.S.-denominated assets.
You know, the question is whether this is the end of American exceptionalism, and you certainly seem to believe that it is. But is it also the end of China's isolationism? Has the Trump administration, the unintended consequences of this tariff policy, as well as the way that he's going about addressing friends and foes, will it push people to actually re-engage with China?
Well, first, it's not the end of American exceptionalism, and what America is doing is absolutely exceptional, just exceptionally damaging. So it's the end of
a different kind of exceptionalism.
It's the end of American leadership, I would say. It's the end of other countries looking to the United States as a stabilizer, as a rule-based order, although that was quite frayed already, but now no one could utter those words with regard to the United States. Similarly, China was not in any way isolationist. It was the major trade partner of probably 150 countries in the world. But China has aimed for the last decades to be a responsible participant in the international system, not to put its head out too far in leadership. Deng Xiaoping famously advised China, bide your time, keep your head down. We need to rebuild after a long century and a half of economic difficulty, what they call the century of humiliation. And so Deng Xiaoping said, keep your head down. Now China can't quite keep its head down. China is under direct attack by the Trump policies. And this is one of the core dimensions of the Trump policy. Part is protecting American economy in a very naive and, I think, doomed to fail way. But part of it also is a hostile action vis-a-vis China especially, which is that China must be broken in its global success story because it's a competitor with the United States. So China now has to take a more leadership role. I think China will have to enable the renminbi to play a more international currency role. It's been very gradual, step by step, but I think it's going to have to accelerate. China, I think, will accelerate the calls for the BRICS, of which, of course, India is a founding crucial member, to play a somewhat of a balancing role to the United States in the international scene, especially calling on the BRICS to reinforce their open trade with each other, because after all, the BRICS is more than 40% of the world economy. It's about half the world population. It matters a lot. And so I think that grouping is going to play a more important role. So I believe that China reflected on this and said, we're not going to be bullied, we're not going to be blackmailed, we're not going to be cornered by the United States. And so the brawl is very real right now and very dangerous.
Real and dangerous. You're absolutely right in pointing that out. But Jeffrey Sachs, you know, as we look at the negotiations that are likely to take shape, and President Trump, pardon my language, saying last night at a dinner that leaders are calling him up, and in his words, to kiss my ass.
No, it's not your language, it's his
It's not
language.
my language, it's his
Right.
language, and I want to be clear about that. You know, and I'm trying to look at this from the perspective of countries that are trying to negotiate agreements with the U.S., including countries like India. What should we be mindful of?
Don't trust that there's going to be some breakthrough. India's vision is, well, the U.S. hates China, so India will, in a way, replace China in the value chains. Companies like Apple or others who are investing heavily in India, they'll produce in India rather than producing in China, and they'll export to the United States. Don't count on it. It sounds plausible. But Donald Trump's idea is to stop international value chains, period. He says, of course, he's an economic illiterate, but he says that we're going to bring all of that production back home, that the hollowing out of American industry has to end. So his idea, yes, he hates China. He wants to confront China. But his idea is not that India is going to be a massive supplier to the United States, because if that were to happen, and it could very well happen in an open trading regime, the U.S. would turn on India exactly the same way.
So don't take the relationship for granted.
Don't even expect there to be an agreement this fall. By all means.
The External Affairs Minister, who was speaking at the summit this morning, said that we've had more engagement with the US in the last few weeks than we've had with the EU in the last few years. He, in fact, went as so far as to say that he doesn't see a reason why an agreement can't be in place before fall. You're suggesting that don't expect that to be the case.
I'm not disputing his optimism. I'm just saying don't count on this. The U.S. is in turmoil. The U.S. is has been likened to China's Cultural Revolution in the 1960s. We are in a cultural revolution right now. We are in a political meltdown right now. Very odd, sounds weird. The United States doesn't exactly give that image, but remember that what's happening is not based on law. It's not based on congressional action. It's not based on public debate. It's not based on public policy. This is a one-man show right now. Weird for us, by the way. We don't have one-person rule in the United States, but people can go online. It's quite interesting and a little frightening to read the executive order which launched this trade war a few days ago. Says, by the powers invested in me as President of the United States, and then it lists 3 emergency actions. I declare an emergency. Are you kidding? I might expect that of some tin pot dictatorship. I don't want to insult the tin. It's crazy that the United States acts this way. A $30 trillion economy, and one person stands up by the emergency powers vested in me. This also has a term that I can't use in polite company, but it is nonsense. It is illegal. It is unconstitutional, not only reckless. It is completely against our laws and our Constitution. Whether that matters or not, I don't know. Are the courts going to stand up, or are they going to?
What about Congress?
Congress is pathetic right now. The problem is Donald Trump came back into office in a system that was already so corrupt that it's brittle. Why corrupt? Because the 2024 elections had $16 billion changing hands, visibly. We're a corrupt political system based on large campaign donations or contributions, so-called, that are legal, but is nothing but corruption. Who bought this government? Elon and his friends in Silicon Valley and some of the Wall Street people. Maybe they have purchasers' regret right now, but they bought this election. They paid for it fair and square. They think they own this government. Maybe they don't really own the government, but the politics are deeply corrupt. So all Congress people care about is their donors. Now, if their donors, by the way, tell them we got a crazy guy making all of these crazy emergency decrees and this has to stop, it's possible that Congress will come back to life, but it's been a doormat up until now. The president is taking congressional authority. Article 1, Section 8 of the U.S. Constitution says that tariffs are a congressional responsibility. If you look at Article 2, which defines the president's responsibilities, believe me, it doesn't say that the president can set duties or tariffs or taxes. We had a whole revolution against England on this exact basis, that no one person could set taxation. But Congress has been completely a doormat up until now. Maybe their donors will start to tell them, we don't like one-person rule, in which case we'll start seeing some congressmen act.
Well, you know, Democrat Senator Ron Wyden has said that he would push for a vote on the issue of tariffs. So do you believe that that could be possibly the pause, the speed breaker in the kind of action that we're seeing?
There are several possible speed breakers. One is that the courts could just declare this is completely unconstitutional, which it is, by the way. Yes, a president can have emergency powers if there's a Category 5 hurricane, if there's a massive forest fire, if the United States is under military attack or terrorist attack, not for 20 years of trade deficit. Sorry, that's not an emergency. That is an economic condition. It's not an emergency. So what Trump has done is plainly illegal. And there are some lawsuits starting, and we don't know whether the judges, many of whom have been appointed by Trump, are going to follow through. So that's one possible break. The second possible break is Congress itself. We already saw 3 Republican senators side with the Democrats to vote against the tariffs on Canada, because these senators in the Republican side had some particular interests in the Canadian-U.S. trade. But it's a sign that already in the Senate side, at least, there's a break. Congress is much more pathetic. These people who go every 2 years for elections, they're really corrupted and pathetic. But maybe on the House side, which is crucial in this, there are only a few votes on the Republican side, and maybe there are a few honest Republicans who will say, we don't want the whole economy to come crashing down. That's another possible break. The next possible break, by the way, is I doubt that there's a single advisor around Trump who really believes in this, other than one crazy guy named Peter Navarro. Other than that, I don't think the Treasury Secretary believes in this at all. Most of the advisors know that this is completely shambolic and reckless. They're making excuses. You know, it's very hard to contradict the boss in general, but it's very hard to contradict Trump in particular. But Elon Musk, you know, he was our prime minister, at least for the first 3 months of the year. He's saying that it makes no sense. We should have a
very public spat with Peter Navarro.
Zero for zero. I don't know how much longer Musk is going to last in Washington. He's going to go back to SpaceX and Tesla, I'm pretty sure, pretty quickly. But inside, everybody knows this is reckless, but nobody tells the boss. This is the emperor has no clothes. I hate the image, but anyway, this is really the situation right now. They're all afraid, but maybe something will prevail inside.
As we wait for some of these scenarios to play themselves out, if at all they do, I want to come back to your point that you were making on India, to say that we must not take the U.S. friendship or the relationship for granted, especially as India has its own aspirations of making India. It is poised to be the 3rd largest economy. And I go back again to the negotiating table, because the agreement is at this stage in conversation between both sides. What should be the red lines from the India perspective?
One overarching point: don't be played by the United States. Don't get into the rhetoric, by the way, which some politicians are using here, that, in fact, some politician said in India recently, this is China's fault. My God, don't fall into that trap. Don't do with Trump the words you used, to use that kind of rhetoric to divide India's role in the world, to play the game of Trump, to believe you're going to have some special relationship with Trump. There are no special relationships with Trump. Trump has one great love, Donald Trump. No other. And India is not going to be a competing suitor for that. India, and I know this is quite unpopular in India, but it's really true. India really needs normal relations with China. And India should appreciate this is a great civilization, and this is a country that's going to play a huge role in the world in the 21st century. I mean, a huge role in the world on all sorts of things, on culture, on economy, on technology, on global peace, an enormous role. India should play that role respectfully and carefully. And that means good relations with China. It means good relations with Russia. It means good relations with Europe. It means good relations with Africa. Yes, have good relations with the U.S., but don't be played by the U.S. Don't be anti-China because that makes the U.S. feel so good and speeds your agreement. And purely on the economic side, the hostility now inside India to dealing with China in trade is not beneficial for India. India is on the cusp of huge advances in technology, But that's not against China. China-India tie-ups in different sectors would be hugely beneficial here and for China as well. And so the whole idea that this is an enemy on this side and America's the friend on the other side, that's the main thing that I'm really warning against. The second thing that I want to warn against is, by all means, try to negotiate, but don't be surprised if it doesn't work. And don't count on it. Look for multiple options. Don't think that the rescue point is we cut the deal with the U.S. Maybe yes. I think likely no. Maybe I'll be proved wrong, and I'll be happy if I'm proved wrong. But don't count on it. Make a multilateral trading arrangement. Promote trade with the rest of the world, including China, including Russia. Don't let the United States say, no, that one's against. That's a sanction. Don't trade with Iran. Don't trade with Russia. India's been very good at that in the last year. Also, as a footnote, India's a little bit been dragging its feet inside the BRICS, saying, this alternative payments mechanisms, we don't want to get into that. The Americans don't like it. We'll keep with the dollar and so forth. That's another related area where India should understand, be careful. Don't depend on the dollar. The rupee should be an international currency. The renminbi should be an international currency. The BRICS should have multi-currency payments mechanisms. The BRICS should not be vulnerable to U.S. unilateral sanctions, which are plainly illegal and plainly destructive. So my main point is India should be a great power, and it should act like one, not taking sides, but rather saying we need global order and global peace.
Well, Jeffrey Sachs, before I let you go, Donald Trump has come up with a new term, the panican. So, I would imagine that you would be squarely put in that camp by him. Are you not concerned about the fact that you're very vocally criticizing the Trump administration's policies?
Look, the world is 8 billion people. We've got a lot of challenges. We can't have one person rule in the world, in my country, period. We've had one of my students dragged off out of his house a couple of weeks ago by unmarked police, so-called, without a judicial warrant. And this student is still in detention in Louisiana. The courts haven't even issued a writ of habeas corpus yet. It's shocking to me. His wife is 8.5 months pregnant right now. We can't have one person rule in this world. We can't tolerate it. We can't play the game. We can't humor craziness. We have to be straightforward adults. This is my view of things.
Jeffrey Sachs, always a pleasure. Thank you very much for joining us here on CNBC-TV18. Appreciate your time, and we look forward to hearing more from you. This is a developing story, and it's not done by a long shot, so we look forward to hearing more from you on how this plays out. But thanks very much for joining us here.
Great to be with you
today. That's Jeffrey Sachs. We are going to take a break here, but there's a lot more coming up. Don't go anywhere. We're back in a moment with more.
Welcome back. Once again, the Nifty IT index and individual stocks are bearing the brunt of the selling pressure. 2.5% gone for the day. This month of April, it's down 12%. And now the year-to-date loss for the Nifty IT index stands at about 25%. And individual IT names like Hexaware, 5.5% gone. Wipro, top casualty in the frontline IT pack, 4.5% gone after Jefferies downgraded it to an underperform and slashed the target price by more than 30% to 210. Coforge, Persistent, these are high growth but expensive stocks which are also seeing some amount of profit booking. But all eyes will be on TCS tomorrow. It's a market holiday, but TCS will be reporting numbers. A press conference is scheduled at 5:30 p.m. and these are the numbers. Dollar revenue growth seen down 0.8%. Constant currency growth is likely to be flat on a sequential basis. But the problem is that the BSNL contract, it was a large contract and that's slowly ramping down, which means the incremental contribution from BSNL is steadily coming down. If you strip out the BSNL contract, the X of that, the international revenue growth, according to some analysts, should be up close to about 1%. Margins could inch up to 24.8%, aided by rupee depreciation. Profits up nearly 1.5%. But that said, the numbers this time will be fairly meaningless because these are backdated numbers. All the uncertainty is what lies ahead on account of tariff uncertainty where the US dips into the recession. So from the company doesn't give you a quantitative guidance. So they're not Infosys, which comes out and says, well, we're going to grow 2 to 4%, but we could try and gauge the corporate behavior. Are deal ramp-ups happening on time? What are tech budgets looking like? If they've been finalized, are they willing to spend that amount? What about decision-making? Are projects being put on hold? Is there a deferral in that, or maybe even a cancellation? So you can gauge the corporate behavior from the management in terms of commentary. Also, the CEO last quarter in January, 3 months back, spoke about some early signs of revival in discretionary spending in some vertical. Those were his exact words, early signs of revival. I guess that's pushed out of the window, but we'll want an update on that. And also the company had sort of said that CY25 will be better than CY24 for the international markets. That's X of BSNL. So, what happens to this commentary? I'm presuming, again, that's also going to be sort of thrown out of the window. But I think the street will watch the commentary, the macro environment, from the management. The stock is trading at about 22, 23 times PE after the recent correction. So it's come off significantly, but it's closer to its, 5-year average valuation multiple now.
Thank you so much, Rima. All of the IT stocks, like you just said, almost 20% lower in 2025. So they're going into this particular earnings season, relatively under-owned. But, let's have a look at the markets. What's actually recovered and recovered very sharply is the entire FMCG pack. RBI Governor Cummins, number one in terms of easing inflation, number two in terms of it being a normal monsoon year, has actually ensured that all of the FMCG stocks have recovered quite sharply. So you pull up names like Nestle, Hindustan Unilever, Colgate-Palmolive, even a name like Britannia, all of these stocks actually are trading near the day's highest point. The other stock that's doing quite well is actually Indigo, some news flow as far as Interglobe Aviation is concerned, and falling crude oil prices seen as a positive. So Indigo too doing quite well as far as today's trading session is concerned. But with that, it's a wrap on this edition of Trading Hour. Stay tuned. Halftime Report is up next.